Fine. Hello everyone. So today I'm going to be talking about the price of gold and why gold prices are going up basically. So the price of gold is about $1,955 right now. And the reason why the price of gold is going up is due to speculation. And there's also you're also having the dollar index go down. So let me show you a chart of this 6 month chart. So the dollar index in March 17th of 2020 was 99.58, and today it's about 93.66. So it has gone down. Let me see this. So it was as high as 102.75 in March also. So it's dropped about 9 points. So about in the past 4 months. So roughly about 8.2%. The dollar index has dropped. So it kind of like correlates to when the dollar uh, index or dollar value drops, then you have inflation. That's what happens. But you can't uh, entirely say that the price of gold is going up due to inflation, because there's also speculative demand, right? So people who are speculating or investing are also they're buying gold, and that's driving it up as well. So there's also times in the dollar index, go back to 2011, the price of gold was about 1950, around November 2011. So the dollar index was about roughly 77 back in 2000, around November 2011. $78, okay. Dollar index was about 78, and today it's about 93.65. So the dollar index was about 16.7% lower in November 2011 than it is today. But the price of gold in November 2011 was about $1,950. Let me see if that's true. This is a good site for getting the price of gold. I guess, let's see, the last 10 years. As you can see, around November 2011, it was about almost $1,900. Not 1950 per ounce. So basically, and today the price of gold is $1,955 per ounce. So this dollar index and the price of gold is not a one-to-one ratio. So you can't use proportionality to find out the price of gold in relation to the dollar index. I'll show you an example. We could just do this simple algebra equation. So x, so we're going to solve for, let's say the price of gold in 2011 November was $1,900. Dollar index was 78. Price of gold was $1,900 per ounce. Is equal to, today the dollar index is 93.65 divided, and we're trying to solve for x. So x is equal to 93.65 divided by 78 times $1,900 per ounce. And let's see what that is. What should the price of gold be if it was proportional? So the price of gold in relation to proportions should be $2,281.22. However, it's not. It isn't a one-to-one ratio. Right, so the dollar index doesn't have anything to directly be related to the price of gold. But all we can say is when a dollar index was low around November 2011, the price of gold was at its highest point, right? This was a very high price for gold, the highest ever. So let me go back. Let's go back 15 years. So around 2008. Let's see what the dollar index was. 2008. It was about 75. The dollar index was 75. $75 index today is 93.64. Price of gold in 2008 was about $800 an ounce. That was also the highest point gold has ever been in this chart. Actually, it's been about $850 in 1980, so it's not the highest, but it's been 800 was the highest it's been in a long time. That's what I could say. It's $800 per ounce. Price of gold today in 2020 is $1,955 per ounce. July 28th. So let's use proportions again. So price of gold 75. It was $800 per ounce, and the dollar index today is this, and we're solving for x. So x is equal to 75 divided by 93.64. Actually, it's 93.64 divided by 75 times 800. So let's get the price per ounce. So what should the price of gold be in relation to that? So it should be about 998.2, 998.82 and 82 cents per ounce. So that's not the case, is it? So it's not a 1-to-1 ratio. So you can't use proportionalities like you can by using the sides of a triangle or some other, or a measurement of length, right? Doesn't work here. So why is the price of gold so high? It's due to speculation. You could say that most of it is speculation, or people are fearing that the dollar index will go down lower and this will result in more inflation, because we're seeing inflation right now, right? There's definitely, the price of goods is going up when you go to the stores. So is it a good time to buy gold? In my personal opinion, I don't think so. No, it wouldn't be a good time to buy gold because it's at an all-time high right now, right? It's never been this high at $1,955 an ounce. So there's speculators who bought a lot of it and who are trying to wait for people to buy it so they can dump it, right? And with the economy being very sluggish right now, it's you have a lot of deflationary pressures right now, right? Because you have a lot of people who are unemployed right now due to this COVID-19 thing, the lockdowns, right? And due to this number of cases surging. So basically, this is a deflationary pressure, which is resulting in unemployment, right? And when people don't have jobs, then they can't afford to pay their mortgage. They can't afford to pay their debts. They can't afford to pay their rents. They can't afford to pay their car payments. And that adds even more deflationary pressure in the economy, right? So you have all this deflation, which is weighing down weighing down the economy, and you have, on the other hand, you have inflationary pressures in speculative assets like gold and the equities markets like stocks and stuff like that, and I guess cryptocurrencies as well, because the price of Bitcoin has also gone up quite significantly. This is a good site for checking out the price of Bitcoin and the history of the price of Bitcoin. Well, it's been going up since, I guess, since around March of this year when you had the lockdowns, and then the price was about $6,187 on March 21st, and now it's about $10,951. So the price of Bitcoin has gone up, and Bitcoin is also a speculative asset. So are stocks, and so are precious metals and everything else. So it seems like people are putting a lot of their money in speculative assets. It might be because after they lost their job, they're trying to find something to do, like invest in the stock market or invest in Bitcoin or precious metals, trying to get a return on their money because they can't earn an income. That could be a case, but anyways, yeah, I guess that's why. So the price of gold cannot be contributed to pure inflation. It could be due to the price of gold is going up due to fears of inflation, right? We could see more inflation in the future due to all this money printing, like all these bailouts, stimulus checks, and stuff like that. But you always have to keep in mind that the money will run out, and when that happens, you'll see deflation. Like I said, when people lose their jobs, they're not going to be able to buy very much, and they're not going to be able to service their debts, any kind of debt. People may have student loan debts. People may have mortgages on their house. People may have credit card debts. People may have home equity loans or whatever, you know. And the debt always leads to deflation in the end. So if you want to buy gold, you could, and Amex is a good place where you could buy it. But I wouldn't recommend buying any precious metals right now because they are very high, and like I said, you got to keep the deflationary pressures. You have to keep that in mind. Okay. Anyways, thanks for watching. By Ace 1000 KS 1975 signing out.